My name is Farhan, and in today's lesson, you will solve question number 15 from May 2023 Paper 1 exam. This question requires you to prepare a balance sheet extract and comes with many complications. We'll walk thoroughly through this question and ensure you have a proper understanding by the end of today's lesson. So, with that being said, let's get started. Varman is a sole trader and runs a design consultancy service. She keeps full accounting records, but the computer files have become corrupted. She has been able to provide the following information. We are given the opening balances at 1 January 2022 for our computer equipment, which has an original cost of £15,000 and a total depreciation, which is also known as provision for depreciation, of £5,625. We are also given a second type of asset, fixtures and fittings, with an original cost of £20,200 and the relevant total depreciation of £7,800. We are given a list of 7 additional information that we need to factor in our calculations when we prepare the balance sheet extract. So as you can see, the requirement of the question is to prepare the extract of the statement of financial position at 31 December 2022, showing the total assets section only, which is to mainly divide it into non-current assets and current assets. So we have prepared 3 columns here for the non-current assets, which is cost, an accumulated depreciation column, and then the net book value column. So let's get into the workings. So for the first group of assets, which is the computer equipment, if I want to find the total cost, so I'll start with the £15,000 that we have been given at 1 Jan 2022, and then I added £6,984, which is the new computer equipment that we have purchased. If you check additional information 1, you will see that on 1 November 2022, computer equipment costing £6,984 was purchased. So 15,000, which is the initial balance at 1 Jan 2022, plus the new computer worth £6,984 makes the total cost to be £21,984. Now let's do the cost calculation for fixtures and fittings. So based on the initial balance at 1 Jan 2022, the fixtures and fittings have an opening balance of £20,200. Let's check information number 3, which says that on 1 June 2022, fixtures and fittings with an original cost of £4,000 and a net book value of £2,900 were sold for £1,650. Now, £1,650 here simply refers to the disposal proceeds or the amount that we have received by selling this asset, and the fixtures and fittings that we have sold had an original cost of £4,000. So when it comes to the calculation of total cost of fixtures and fittings that are remaining in the books, you take the initial balance of £20,200 from 1 Jan 2022, and then we subtract £4,000 to reflect the disposal of the fixtures and fittings, which were originally purchased for £4,000. So once we do that, we're left with £16,200 as the total cost of fixtures and fittings remaining in the books. Let's calculate the depreciation expense for computer. So check information number 2. It says that depreciation on computer equipment is charged at 25% per annum using the straight line method, and the depreciation is charged on a monthly basis. All right. So when it comes to the straight line method, we can just simply apply the percentage that we are given on the original cost of the asset that we are calculating this for. So for computer, at 1 Jan 2022, we know that we had £15,000 worth of assets in the books, and we simply applied the percentage, which is 25, on that 15,000. But during the year, on 1 November 2022, we purchased more computer, which is worth £6,984, and we are depreciating that computer that we have purchased, but by multiplying 25%. But at the same time, we are multiplying it by 2 by 12. Now, what that means is because the second computer was purchased on 1 November 2022, and because we're preparing the financial statement at 31 December 2022, the second batch of computer was only used for 2 months. So 25% is an annualized rate because the question clearly mentions 25% per annum. But what we have to do is convert this 25% into a 2-month rate because of the 2 months of usage for this specific batch of computer. So what we do is take the original cost of 6,984, multiply 25%, and then convert the 25% by multiplying it with 2 over 12 to reflect the fact that out of the 12 months that we generally have in a year, this computer has been used for 2 months only. Okay, so once you add the amount for the first computer and the second computer, the total we get is £4,041 as the depreciation expense for the computer that's remaining in the books. Okay, so what about the total depreciation then? Now, initially at 1 Jan 2022, computer equipment had a total depreciation of £5,625, and then for the current year, we have an additional £4,041, which is what we have just derived, and that gives us a total depreciation of £9,666 per computer. So let's look into the balance sheet. So you will see that the computer equipment has an original cost of £21,984, and the accumulated depreciation is £9,666, which simply came from the calculation of the total depreciation on this side. And once we subtract the accumulated depreciation from the original cost, you can calculate the net book value for computer, which is £12,228 at 31 December 2022. All right, so let's do the same thing for fixtures and fittings. Now, this is where some of the complications come. So if you check information number 4, depreciation on fixtures and fittings is charged at 15% per annum using the reducing balance method. A full year's depreciation is charged in the year of purchase and none in the year of disposal. Okay, so you saw how when we derived the depreciation using the straight line method, you could just simply use the percentage that you're given and multiply it with the original cost. But when it comes to using the reducing balance method, we always would want to calculate the net book value for the asset first. And this is where the key difference is between straight line and reducing balance method. Reducing balance method will apply the percentage on the net book value, while the straight line method will apply the percentage on the original cost. Okay, so that is why to begin this calculation with, for fixtures and fittings, we first calculated the net book value at 1 Jan 2022. Now, net book value can be derived by taking the original cost and then subtracting the total depreciation that we have at 1 Jan 2022. So both of these numbers are given in the table here, and that is where I got this from. So the net book value that we calculated at 1 June 2022 is £12,400. Okay. We also need to factor something in. We know that during the year, we have sold fixtures and fittings with an original cost of £4,000 and a net book value of £2,900. If you check information number 3 again, you'll see that the fixtures and fittings we have sold had an original cost of £4,000 and a net book value of £2,900. All right. So the question also says that a full year's depreciation is charged in the year of purchase and not in the year of disposal. So this fixture and fittings that we have sold would not be included in our depreciation calculation. So what we have to do is remove the effect of this asset first, because as the question says, you only calculate depreciation in the year of purchase and in the years of usage, but you do not calculate the depreciation in the year of disposal, which is what is happening with this asset. So we want to find the remaining net book value, and the way we can calculate that is start with the initial net book value that we have of 12,400 and then subtract 2,900 pounds. So you will see that 12,400 is what we have calculated at 1 Jan 2022, and we have subtracted 2,900 pounds, which reflects the net book value of the asset that we have disposed, and the remaining net book value that we have is 9,500 pounds. Then you can calculate the depreciation expense for the year ending 31 December 2022 by simply taking the percentage that we have been provided in the question, which is 15, as you can see here, and multiplying it with the remaining net book value of 9,500, and we get the depreciation expense of 1,425 pounds for fixtures and fittings for the year ending 31 December 2022. All right. Now, so there are more complications that we need to work with. As I've mentioned, you're in A-levels, so it won't be easy. It won't be straightforward. They will have some complications in the questions here and there, so that way they can challenge you. So what we know is that if you want to find the net book value at a given point in time, you can simply start with the original cost of the asset and then subtract the total depreciation for that asset. All right, so based on information number 3, the net book value for the fixtures and fittings that we have sold was 2,900 pounds, which is what I have included here. And the original cost was 4,000 pounds, which is what we have taken from the information given here as well. The total depreciation is something that we did not know, but if you use some basics, if you just use some logic, you would see that the total depreciation has to be 1,100 for the asset that we have sold, because if it is 1,100 pounds, only then when we subtract this from the original cost of 4,000 pounds, you would end up with a net book value of 2,900 pounds. So just some simple algebra that gives us the total depreciation for the asset that we have sold, which was 1,100 pounds. Okay. Now, I want to find the accumulated depreciation for the remaining fixtures and fittings that we still have in the books. To begin with, I started with the opening balance that we have been provided, which is 7,800 pounds taken from the table here. Then we subtracted 1,100 pounds, which reflects the disposal, which reflects the removal of the asset that we have disposed. And then we added a further 1,425 pounds, which simply relates to the depreciation expense for all the remaining fixtures and fittings in the books for the current financial year. So once we do that, we arrive at 8,125 pounds for the accumulated depreciation of fixtures and fittings. So let's go back to the balance sheet. You will see that for fixtures and fittings, the original cost is 16,200 pounds, which is what comes from here after the original cost of the asset that we have sold was removed from the initial balance that we had at 1 Jan 2022. Then we subtracted the accumulated depreciation of 8,125, which is what we have just derived. This remains in the books for the remaining fixtures and fittings. So once you subtract the accumulated depreciation from the original cost, you get the net book value of 8,075 pounds. Now, I want to close the non-current assets section. So you just find the total cost, the total accumulated depreciation, and when you subtract the total accumulated depreciation from the total cost, you arrive at the net book value, which is 20,393 pounds. In other words, the total value of non-current assets that we have in the books for the business is 20,393 pounds. All right. So I believe that was pretty clear and easy to understand. Now we're going to prepare the current assets section for the balance sheet. So let's look into the remaining information that we are given. So I've started with information number 7, and let's read what that says. Vaughn rents an office at an annual rent of £4,560, which means that Vaughn runs his business and the business has a rent expense of £4,560. At 31 December 2022, Vaughn had paid 3 months' rent in advance. All right, so the rent that Vaughn has paid for in advance is what we call a prepaid rent. And this is a current asset to Vaughn because this rent that Vaughn has just prepaid for the business will allow Vaughn to utilize the space for business purposes in the next 3 months, which comes in the next financial year. Since we're preparing the books at 31 December 2022, this amount hasn't been utilized by Vaughn, and Vaughn has some economic benefits attached with it, and we can classify this as a current asset. On the other hand, the landlord would have received this rent in advance, and from the landlord's perspective, this would be an obligation to fulfill the duty by allowing Vaughn to rent out the space in the next 3 months. So what we have done here, we know that the annual rent is £4,560. We calculated the monthly rent, assuming that the rent is evenly distributed, which is the case everywhere. So £4,560 being the annual rent divided by 12 months gives us the monthly rent of £380. Now, we want to find the value of the rent that we have paid in advance, which is simply multiplying £380 with 3 because we have paid for 3 months in advance, and that means that £1,140 of rent has been paid in advance, which is what we call a prepaid rent and which is what falls under the category of a current asset. And the reason we call it a current asset is because Vaughn has some economic benefits attached to it, which in other words mean that in the future, Vaughn will be able to utilize the space for business purposes. So in the current financial year, it hasn't been utilized yet. So that is why it is a current asset when we are doing the books at 31 December 2022. So let's go to the current asset section. You'll see that prepaid rent is £1,140. That's what I've written. Let's look into the next information that we're given. So information number 6, the bank statement at 31 December 2022 showed a debit balance of £425, but Vaughn knows that there was a bank receipt of £2,714 and a check payment of £619 that had been included in the cash book but were not shown on the bank statement. Now, I need you to understand some things here. Bank statement is issued by the bank, all right? So when you are presented with the bank statement, all the numbers that you can see in the bank statement is from the perspective of the bank, okay? And the cash book, which tracks all the cash inflows and outflows within the business, is from the perspective of the business, okay? Now, the question explicitly mentions that bank statement at 31 December 2022 showed a debit balance of £425. Now, as we have just discussed, bank statement is issued by the bank, and from the perspective of the bank, a debit balance of £425 would mean that you, as the business owner, are an asset to the bank. Or just to make it simple, we owe the bank money, in other words, just to reverse it. So to begin with, Vaughn has a bank overdraft of £425. So you need to be very careful with the wording in the exam. So this is one of the complications that I was telling you about, because a lot of students I've seen would end up making mistakes with this one thing. And that would stop them from getting the full marks that they would have got So we start with negative 425. So negative 425, this is because the balance sheet is prepared from the perspective of the business. And as we have already figured out, Woman has a bank overdraft. Okay, so a debit balance of 425 in the bank statement would mean that we are an asset to the bank. And from our perspective, we would say that we see the bank as a liability. So in our books, we should have negative 425 to begin with, which is basically the bank overdraft. We know that we have bank receipts of £2,714, which haven't been factored in. So bank receipts refer to inflow of cash or inflow of funds coming into the bank account. So with the negative 425 overdraft we have initially, we add 2,714, which reflects the receipts or the cash inflows. And then we subtract 619, which should reflect a cash outflow. And you can see it here at a check payment of £690. So a payment refers to outgoing of funds from the business account. So we start with negative 425. We add 2,714 to reflect the receipts or cash inflows. And then we subtract £619 to reflect the payments that we have made. So once we have done that, we get £1,670 as the final balance for the bank that should be in the books. Now, bank is a current asset for the business, and the reason we call it a current asset is because when you are running a business, you would want to utilize the funds that are available to you as soon as possible. So the funds are constantly being used so that we could generate more revenue, purchase assets here, pay for expenses there, and take care of all the regular operations and expenditure of the business. Bank is a current asset. So let's go to the balance sheet. You will see that under the current assets section, I've included bank as £1,670. Okay. All right. So let's look into the last information that we have, which is point number 5. A provision for doubtful debts. A provision of £637 for doubtful debts was created at 31 December 2022. This was calculated at 2% of the trade receivables at that date. Okay. So we know the provision for doubtful debts is £637. And if you want to calculate the provision for doubtful debts yourself, you would start with the percentage that's given to you in the question, which you would multiply on the trade receivables. I've written trade rec for short, and that should give you the provision for doubtful debts. I've written here PDD for short. But what's happening in this question is that we're given the percentage, we're given the provision for doubtful debts of £637, but we do not know the trade receivables. So what we are simply doing in this case is using algebra. So 2% of trade receivables should equal 637. So if you want to find trade receivable and make that the subject of the equation, then you could divide 637 with 2%, and that should give you a trade receivable of £31,850. So trade receivables are the credit customers of the business to whom the business has sold goods on credit, and these customers are supposed to pay within a short period of time. Therefore, they're classified as a current asset. You would not really want your customer to take more than 1 year to pay their debts, because that way you won't be able to run your business. And also, that is one of the reasons why we classify them as a current asset. Moving on to the balance sheet, you will see that for current assets, we started with the gross amount for trade receivables, which is £31,850. And then I subtracted provision for doubtful debts of £637, and we got the net trade receivables of £31,213. Now, do not write PDD in exam, because the markers have the full authority to deduct marks in this case. So make sure you don't marks like that. So just write the full form, provision for doubtful debts. And then we just simply add everything we have for current assets, for prepaid rent, bank, and net trade receivables, and that gives us a total current assets of 34,023, which when added to the total of the non-current assets of 20,393 pounds, we get the total assets that combines both non-current and current assets of 54,416 pounds. All right, so that's it for today's lesson. I believe you found a lot of value in this content. If you need help with any topics, make sure to post in the comment section for this video, and I'll definitely sort you out soon.